All right, let's talk about something wild. In 2025, one stock, RobinHood, went on an absolute tear that left Wall Street speechless. I mean, this wasn't just a rally, it was a full-on rocket launch. Today, we're going to break down the playbooks behind that insane surge, and more importantly, how you can actually use it to spot the next big breakout.
So how does this happen, right? It's the question every single one of us is asked. You see a stock that was just, doing nothing, and then suddenly it just ignites and shoots for the moon. Is it just pure luck, a total fluke, or is there something else going on under the surface?
Well, the answer, especially when you look at a case like Robinhood, is that it's a formula. It's this powerful combination of different things all happening at once, creating this kind of perfect storm of momentum. And today, we're going to hand you that formula.
To really get the scale of this, we have to rewind. Let's go back to 2023. Robinhood was trading for just over $12 a share, and for a long, long time, it was a pretty frustrating story for a lot of investors who saw the potential, but the stock just wouldn't move. And then this happened. The stock absolutely screamed to a peak in 2025 of over $153. That is a mind-blowing, over 1,100% climb. That's the kind of move that just doesn't happen by accident.
I mean, to put that into perspective, just in the first half of 2025, the stock jumped over 150%. This was no slow burn, people. This was an explosion. So, the big question is, what lit the fuse?
We've dug into this and we boiled it all down to what we're calling the four-part fuel formula. Seriously, think of these as the four essential ingredients that you need to power a rocket ship like Robinhood. So here are the four pillars. First, you've got blowout earnings that basically proved the business was on the right track. Then you have exciting new products and global expansion. Third, a massive credibility boost from joining a major index. And finally, you have the raw power of retail investor excitement. Let's dive into each one.
First up, the fundamentals. You gotta have them. In the first quarter of 2025, Robinhood dropped a bombshell report, a net income of $336 million. Now that's not just good, that's more than double what they made the year before. This wasn't hype anymore. This was cold, hard data that proved the growth story was real, and it made Wall Street snap to attention.
Okay, next ingredient. They started expanding their universe. Robinhood wasn't just sitting back and counting their money. No, they pushed into global markets, they bought the crypto exchange Bitstamp to get a real foothold in Europe, and their crypto revenue just exploded, doubling along the way. Every single one of these moves opened up new markets and, you guessed it, powerful new streams of revenue.
Now this one is a huge deal. On September 22nd, 2025, Robinhood gets the call. They're being added to the S&P 500. Look, this isn't just some vanity award. This is a game changer. It literally forces all those gigantic index funds that track the S&P 500 to buy the stock. That creates this huge automatic wave of demand and gives the company a whole new level of street cred.
And finally, of course, you can't tell the Robinhood story without talking about the retail investor. The meme stock energy came roaring back. You had this massive spike in speculative options trading, and just the general buzz around fintech and crypto created this incredible tailwind that just amplified every other catalyst.
Okay, so we've seen how the whole formula came together for Robinhood. Awesome story. But the real question for us is, how can we turn this one specific story into a general rulebook, a playbook for spotting the next big breakout?
We can actually pull a few key patterns from this. First, be on the lookout for what we call the turnaround plus story. That's a company that had a frustrating past, but is suddenly showing new, real growth drivers. Second is the catalyst sandwich, and we'll talk more about that. It's not just one piece of good news, but a bunch of them converging at once. And third, watch for the volume spike. It's a dead giveaway of unusual trading and options activity.
And this right here, this brings us to one of the most important lessons from this whole rally. Think about it. A single catalyst is just a lonely spark. It might even fizzle out. But a catalyst sandwich, strong earnings, plus an acquisition, plus getting into an index, that creates a powerful chain reaction. That's where you find that explosive potential.
Now, before we all get carried away and start hunting for rockets, we have to be realistic here. Every single rocket has risks. And you know what? The higher and faster they fly, the more careful we've got to be.
So what's the catch? What's the downside with a stock that's up over 1,000% in just a couple of years? Well, often, the biggest risk is hiding in plain sight. It's the valuation.
At one point during its big run, Robinhood's price-to-earnings ratio was over 72. Now, to give you some context, the average for the S&P 500 is usually somewhere around 25. That is what you call a rich multiple. It basically means expectations for future growth are through the roof, and any tiny little disappointment could trigger a really sharp drop.
And it's not just the valuation. You've also got execution risk. I mean, can they actually deliver on all these big promises? There's always regulatory risk, especially in something like crypto. And of course, after a crazy run-up like that, there's always the simple risk of a pullback, as the early investors decide, you know what, I'm going to take my profits and go home.
Okay, so we've seen the formula, we've seen the patterns, and we've talked about the risks. Let's wrap this all up with a clear, simple framework that you can actually use for your own analysis.
First off, you've got to monitor the momentum. And don't just watch the stock price, create a catalyst calendar for yourself. Put down earnings dates, product launches, investor days, and keep a super close eye on the data. Look for those weird spikes in trading volume and options flow, because they can be an early warning sign that something is brewing.
Second, and honestly, this is the most critical part, you have to manage your risk. Chasing a stock when it's already gone vertical is a very dangerous game. Your entry point matters. Always know your exit strategy before you even think about getting in. And make sure that the exciting story you're hearing is actually backed up by solid fundamentals, just like Robinhood's was with its profit growth.
So there you have it. The Robinhood rally wasn't some random fluke in the market. It was a playbook of converging catalysts. It was a story where fundamentals, expansion, institutional validation, and retail excitement all came together at the perfect time. So, the question I'll leave you with is this. Now that you've seen the formula, what will you be looking for next?